I think we've hit them all over the last 5 years. And a lot of people are trying to navigate through the situation. Either they're trying to do it on their own and they're doing it, for example, dealing with firms like Wealthsimple and robo platforms. Others are relying on advice that they're receiving by either a neighbor or a friend or a family member. Some people are working with a trusted advisor, but I would say that in our experience, the individuals that seem to navigate through these situations the best are people who actually work with a team of professionals. And when I say team, a fully integrated team, not where the client or the individual is working with an accountant who is also, they're also working with their own advisor, maybe their own investment person, and they are kind of like the quarterback. Well, I'd like to welcome everyone to the Money Mindset Mastery webinar. I'm your host, Jim. Joining me today is Eric as well as Denis, and we're having some technical difficulties with Ryan, so hopefully he'll be joining soon. So if you see me kind of looking away or looking at something else, it's because I'm trying to see where he's at. Maybe he slept in, guys. What do you think?
Lucky.
Yeah. So guys, this is our very first webinar of 2026. I think if we kind of go back to the history of the money mindset, it started off years ago, 2019, 2020, as the Tortoise and Hare financial podcast, and I was a single host. And the reason why I started that originally was because I had open heart surgery. Critical illness was something that kind of helped my family get through. I just wanted to kind of share that experience. And then after that, Ryan joined TVH Financial as my associate advisor, and he became my co-host of the podcast, and we rebranded to the Money Mindset Mastery podcast, which is still going to be active. And then we added more professionals to the team, Eric and Denis. And for this year, we decided, you know what? 4 is better than 2. So we might as well start hosting these as webinars. That will allow people to actually ask questions as well. So if you are listening and watching, there should be a chat section on the right-hand side. So you'll be able to send us some questions if you have any questions. And these will be converted to a podcast as well as a YouTube video as well. So for anyone who doesn't want to join live and you want to kind of listen on your own time, I know I've had people say that they like listening to the podcast while they're going through their walk in the evening with their dogs. So anyways, it'll still be in that format as well. So Eric, Denis, welcome to the show. You guys excited?
How couldn't we be?
It's the first one in 2026.
It is, and you guys have done this a few times, but again, we've decided to change things up. So today we are talking about, there's a couple of titles, right? One of them was From a Guide to a Personal CFO Team, how wealthy families actually operate. And the reason why we wanted to have this topic today is there's been so much volatility, guys, in the markets. And when I refer to the markets today, I'm not just referring to the stock markets. Real estate market has been quite volatile. Bitcoin has been up and down like a yo-yo. Precious metals has been another one. Interest rates, inflation, I think we've hit them all over the last 5 years. And a lot of people are trying to navigate through the situation. Either they're trying to do it on their own and they're doing it, for example, dealing with firms like Wealthsimple and robo platforms. Others are relying on advice that they're receiving by either a neighbor or a friend or a family member. Some people are working with a trusted advisor. There are a lot of very good trusted advisors out there. But I would say that in our experience, the individuals that seem to navigate through these situations the best are people who actually work with a team of professionals. And when I say team, a fully integrated team, not where the client or the individual is working with an accountant who is also, they're also working with their own advisor, maybe their own investment person, or whatever else. And they are kind of like the quarterback. We're referring to an actual advisory team like ourselves. So maybe a bit of background. We can start off with our backgrounds. Hopefully Ryan can get his camera up and running. I can see he's trying. Denis, let's start with you. What is your background in the industry?
Well, I'm currently the portfolio manager for the team. I see investments started in the late 80s, early 90s. different roles, basically in the different roles, I mean, different way of looking at the entire picture, which was well. So I worked for an asset management firm, went to a financial planning team, and throughout that I was getting my education for it, got my CFP and had my CIM, and the portfolio manager role really interested me because I've always been heavily interested in investments, and this is where I think I could add to the team. I think I add to the team, and regarding talking about investments, when I became portfolio manager on Raintree, then part of the TVH Wealth team, I think it's gone well so far. And I like the team approach where there's a specialty with everybody on the team. Insurance and planning. We got Eric with the private equity, which is a rare in a lot of cases on teams where you don't usually have that offering. And of course, we got Ryan when he's going to come as a cash flow specialist. I really like this team aspect.
Yeah, and Denis, I mean, I definitely rely on you a lot when it comes to your past experience as a banker, because you've worked with the banks for a significant period of time, as have I. So when we talk about the differences between working with the bank and a banker compared to working with an independent individual or an advisory team like ours, we have experience. We understand what the differences are. I still have friends that work at the bank. They're wonderful people. I hear their stories. A lot of them are clients of mine. So even though they've worked with the bank, for many, many years as their career, they're still coming to me for advice because of the team structure that we've put in place. So very different. We're going to maybe touch on that a little bit more in detail as well.
Yeah, a lot of years of experience. We've been through all kinds of different market conditions in the last 30 years.
Yeah.
Some of them are a little different, but in the end, they end up being similar. So it's good to have that background experience, even for when I'm investing for myself and definitely for clients.
Yeah. Well, you have so again, you manage the portfolio solutions for our clients. And that's typically, again, your stock and bond portfolio with some alternatives. But then, Eric, you come in and you joined the team in, I think it was June of 2025. So you bring a wealth of experience as well. So maybe you can kind of share your background and what you, or how you support the advisory team at TVH.
Yeah, well, my background was largely in business. I've been involved in a number of businesses, and really, I'm a person who tends to be like, no, I can do everything on my own. And the nice thing about one of those was heavy construction. You can't do that all on your own, and so that's where I really learned to delegate and to assign, and realize that there's a lot of importance in each person being good at what they do. And when I sold that business in 2007 and started in doing what I'm doing now, I enjoyed that financial planning, insurance, investment, I could do it all on my own. And so I didn't have to rely on anyone else. But between then and today, this world has gotten so complex. Every single aspect of our lives is just getting more and more complex by the day. And really, I spent the last 10 years of my life looking at ways now to try to find a team I can silo that expertise with. And so, I mean, I appreciate when you can do something on your own. It is nice to be able to manage that, but it's just getting so hard to do. And having like an insurance specialist, having, Denis as a portfolio manager in the public markets, and then also being able to, from my perspective, focus on the private equity side of investing and really looking at those as businesses. That was really the quintessential point, the reckoning in my life that I needed to say, you know what, it's so much better if we have a team we can rely on. And finding a good team that you enjoy being with, finding a good team that is good at what they do so that you can trust them and say, I can pass this to Jim and I know Jim's going to take care of it. That's really the big step that I needed. And that's, middle of the year last year when I joined here, and all my dreams have been coming true ever since.
Right. Now, Ryan, Pokeroo, you do exist. You are real. And we can't hear you now. No, your microphone's not working. Muted, now unmuted.
Hey, but you look good.
You do look good. So, Ryan, are you able to say anything? Or are you just going to sit there and look pretty for us? All right. Well, Ryan, wealth of experience personally in a lot of different aspects. He's been a business owner in the past. He's been an employee, traveled the world, I think like 34 countries, Ryan. Yeah, so there you go. And then in 2019, became an advisor with one of the career agencies, one of the largest ones in the country, and just felt that it wasn't the right fit for him. We met because someone that we both know saw that you were having some challenges with where you were situated and asked if I can just kind of have a chat with you, spend some time to see if there's any way I can help you. And I think about a year and a half, 2 years after that initial conversation that we had, which was during COVID, I decided that I wanted to expand my team. I recognized, kind of like Eric, that I had my limitations, probably was starting to develop tunnel vision with certain things and needed to have just a different voice in terms of making recommendations to clients. I liked Ryan. I reached back to him to see if he was interested in a change, and ended up joining the TVH firm as well, and has been with us for well over 3 years now. But through the evolution of his career path, Ryan has also become a cash flow coach. So he has his designation, right, Ryan? Can you say something? Can we hear you? No, we still can't hear you. Is there another microphone you could use? No. So he received his designation as a cash flow coach. And I would say that there's been a high demand for his services over the last couple of years, especially once interest rates started to go up. People's mortgage rates were going up, their payments were doubling. And what we're finding is that a lot of individuals, when we would speak with them about their cash flow, it wasn't necessarily always situational. They recognized that they were developing a bit of a pattern. And we recognize that these people would go to the bank and they would be told to just put a budget together and stick within the budget. And the reason why we didn't believe that that was the right path was because there's evidence out there that budgets work just like diets. And there's a 90% success or failure rate, right, when people budget. It was clearly behavior is what we've recognized. So the behavioral cash flow coaching program was launched, and Ryan not only is a wealth advisor, has that experience, but he specializes in offering coaching programs to our clients who are dealing with cash flow challenges. So while we're trying to get Ryan back online, Eric, can you maybe share with people what is a CFO team?
Yeah. So to start with just the basic definition of a CFO, if you don't know, the executive suite of most big companies, pretty much all major companies, will have a chief financial officer whose job is to make sure that all of the financial aspects of the business are kind of being taken care of. And you transfer that into your personal life, or even personal and corporate if you're a business owner. A CFO team really is someone who can cover all of the aspects. So you come to the table with a question, should I be leasing this equipment or should I be renting it? Should I be paying down my mortgage or should I be adding to my investments? All of those are questions that a CFO team can come to the table and help you answer and find you the experts you need. Because like we said, we don't know everything, but we have a lot of people at our disposal who can answer every question you could come up with. And so that's the importance of a CFO team, is they're just able to help you solve each and every one of your financial challenges that come up.
So what I would say is this, in terms of our group, we kind of had a CFO team when we first launched TVH Group. So originally we started off with myself and John, where John offered the mortgage financing solutions, also coached people through building their real estate asset portfolio. So a lot of people want to get into the rental market, and that's something that John was able to assist our clients with. And then Sonia came on board on the legal side of things and was able to offer transactions on the real estate side. She was also someone who built her real estate portfolio as well. So she was also able to guide people in kind of building their real estate empire, so to speak, and started to expand in estate planning, wills, powers of attorneys, things of that nature. And then we added David on the accounting side. So he was able to assist a lot of our clients with not just tax reporting, but also with some strategies, tax strategies. And of course, with me as a wealth advisor, I help people with some tax strategies, investing, a little bit of cash flow, and essentially retirement planning. So that was kind of like the original CFO team at TVH. And we found that people liked working with us because I remember when John and I first partnered up, and he made the comment of, if a client went to the bank and said, hey, I have $100,000, what should I do with it? Well, if they were dealing with a personal banking officer, chances are they would have said, hey, here's a great mutual fund portfolio. That's where you should put your money in. Or if they were dealing with an independent advisor, right, just strictly a mutual fund licensed advisor, what do you think that mutual fund advisor would have recommended? It would have been a mutual fund. Had that same client went to their realtor or their mortgage advisor and said, hey, I've got $100,000. What do you think I should do with it? Well, chances were that they were going to be told that they should put their money into real estate. It was the bias. That was the issue, right? There was biases with the people that they were working with. So in terms of working with us, we removed that bias because a client was able to walk in and sit down with John and I to say, hey, I have $100,000. What do you guys think we should do with it? And the first conversation was, well, what would you like it to do for you? What are your goals, right? What are your expectations? Do you need this money right away? How are you trying to build your wealth? Let's run an analysis and fully determine if you should put that money into an investment portfolio or if real estate makes sense, if we can do a combination of both, right? We remove the bias of one or the other. So that's how we kind of started off, and we were able to assist our clients in making unbiased recommendations. And then obviously you add Sonia and you add David, and then the conversation. There were many meetings that we had where the four of us would sit down and we would talk about a client situation. It's like, here's the situation. What's the approach? I would provide my recommendation. John would have his. Then Sonia would come in from a legal point of view, if we needed to be aware of anything. And then, of course, Dave would come in to talk about the tax consequences of any of the recommendations that we made, right? We've now evolved beyond just the four of us. So now between, the partners, so I'll refer to the TVH group partners as John, Sonia, Dave, and I. We now have the TVH Financial advisory team. And the advisory team would be myself, Eric, Denis, and Ryan. Because within TVH Financial, we all offer different level of expertise, right? So again, for me, I would say that I'm definitely kind of more the planner. That's my approach. So most clients tend to flow through me. I put a plan in place, and then after we have that plan, we look at implementing some of the strategies. And during that implementation process, it may require a liquid portfolio solution. Well, that's where Denis comes in. Or it may require some private alternative investment assets, and that's where Eric comes in. They may need a cash flow solution. That's where Ryan would come in. I would say it's similar to, Eric, you talked about the construction industry. If you are someone who is looking to move into a home, now you have a couple of options. One option is you go to a subdivision, right? You have a developer, they're building 500 homes. They all kind of look the same. There's no customization. That's kind of like your retail solution. That's your banking solution, right?
You get to pick whether the walls are gray or brown, and that's about it.
That's about it, right?
Yeah.
But what if you're someone who wanted to build their own custom home? They found the lot. They want the house to look a certain way. They're not going to be able to do it on their own. They're going to hire a project manager or a general contractor typically, right? And they're going to share with that general contractor what they want this home to look like. And then it's up to the general contractor to then take that and complete that home and give them that dream home that they're looking for. Now, I will guarantee you that general contractor that you hire is not digging the foundation, putting the foundation in. They're not putting up the studs. They're not doing the architectural drawings. They're not doing the plumbing or the electrical. Now, they might be able to assist with some of those things, right? But they are going to have a team of professionals who will deal with every single aspect of the building of that dream home until it's finally completed and delivered to the client. I would say, using that analogy, we are that general contractor. You want the specialized service. You want to make sure that your financial goals and dreams are achieved. And you don't want to rely on retail cookie cutter solutions to help you. You want customized solutions. You work with a team like ours. Any thoughts on that?
Yeah, I think that's a good analogy. The people who put the concrete in your foundation are not going to be the ones who build your kitchen cabinets. And that's, there's very different roles. So that's a very good analogy.
Okay. Denis, how about your thoughts?
Yeah, well, we're trying to do what's best for the client. We don't want to be limited by our license. or products or anything like that. If the client comes in and I know I've been speaking to one that he wanted some guarantees, well, the portfolio management may not be for him. It may be more seg funds on the insurance side. So you really want to be able to offer what is best for the client after you do the planning, the strategy, and then if you're left with what's only something I can offer, then you're limited, and that's not what's best for the client.
Right.
So in having specialties, we could give the client what they mostly need as opposed to what we can only sell them. We do a little of that on a membership of the Estate Planning Council. They realize that it's not only lawyers that are part of the equation when you're developing an estate plan. There's a lot of other people involved as well, including asset managers, insurance people, anything like that. So they actually bring all kinds of people and tax specialists, of course, into the room, and we have discussions with them. We have webinars. It's not only from a legal standpoint. So I think what this is, with all four of us in there, I think we can offer what's best for the client because we are not that limited. Most of us have our insurance license, but we have more special. Some people are more specialized in it. I would not do a corporate insurance policy, for example, myself. I would ask you to help and come along on that. So we look at our own team, the specialties, and what's best for the client in the end.
Yeah, and we work alongside our clients to provide the different levels of specialties. I mean, I can say today I met with some long-term clients who have investments. Their insurance is held with a friend of theirs that they've been friends for a long time, and they've had the insurance for a long period of time. They came in today, met with Sonia for some other part of their planning, right? So they were able to come into our office, and we don't expect everyone to come into our office, but they chose to come in. They met with the lawyer. Then they met with me. If they dealt with individual professionals, they would have to come down, meet with a lawyer, travel to the next professional's office. Maybe it'd have to be scheduled on a different day, but they were able to do it all in-house today. And part of their planning, they're dealing with a real estate situation, and they're trying to come up with the funding for the real estate to close on the real estate. And I remember that they had like a life insurance policy through this other advisor, and it had built cash reserves. And I said to them, I said, well, why don't you collateralize that insurance policy? And instead of depleting your portfolios, which you're going to need in the next couple of years for retirement, why don't you just collateralize the insurance policy? And they did acknowledge it, said, well, we do know you had mentioned that before, so we did ask the advisor about it, and he did recommend collateralizing as well. And then he basically said, take the policy and go to a bank and apply for a collateral loan. And I was shocked by that. I'm like, so he's not actually helping you with the process? And they're like, no, he basically told us to take the policy and go speak with the bank and ask them for a collateral loan on the insurance policy. I'm like, well, if you go to a regular branch, like a lot of them are just not going to know how to do that or what that is, right? Like the insurance companies typically have programs in place. I've worked with programs with different providers and explained to them, like, this is something that the advisor could assist you with. And it's either the advisor didn't want to or didn't know how to, but basically left it in their own hands to try to deal with it. So I was able to share with them, well, here's different programs that we help with, and they're kind of thinking through that process if they're going to go ahead and proceed with that, right? Does it mean that their insurance advisor is a bad advisor? No. But what I would say is we know what we know and we don't know what we don't know. And even though that I've been in this industry for over 35 years, I'm still learning new stuff all the time. And a big reason behind that is because I'm meeting with you guys as well, right? Because we do get together once a week. We do review client situations. Most of them are fairly straightforward, but there are some that require involvement or input from all of us. And we learn from each other. Right? Like Eric, I think we're meeting with some clients later this week. They're looking at selling a business. They've already, I believe, used up most of their lifetime capital gains exemption. And you have a solution where they might be able to save on tax that I had no idea, right?
Yeah. And what people don't realize about that is that was written into the Tax Act of Canada before RSPs and TFSAs and LIRAs ever existed. And most people just have no idea that concept even exists.
So we're able to do a better job for the clients because we have different professionals within the team that we can tap into. right? I know, and unfortunate Ryan's still trying to get in. And Ryan, if you can hear me, it looks like your browser might be open or your session might be open in another browser. You got to close that as well. And if you can't hear me, that's okay. But Ryan's been working on a fairly complicated situation. It's an estate concern. We have a solution for that. The client has been dealing with their trusted account or their trusted advisor at one of the big banks for 30 years. And their advisor, all they focused on was rate of return and fees, not the concern that if this money flows through the estate, there's going to be a potential for one of the beneficiaries challenging the estate, which means, again, good thing we have a lawyer as part of the group, that Sonia was able to share with them that could mean 2 to 3 years of those assets being tied up in the courts, hundreds of thousands of dollars in penalties and legal fees and probate fees, and that their advisor who's focusing on rate of return and management fees is not doing a good job for these clients because of these other real concerns. So I know, for example, Ryan and I and Sonia behind the scenes have kind of been working on this, bringing our different expertise. And then about 2 weeks ago, I think the four of us, meaning Eric, Denis, Ryan, and myself, we reviewed the situation and we all had our input, right? Denis, you were coming in as the portfolio manager, also as the trust and estate practitioner, right? You had your thoughts and opinions on the approach. Eric, you had yours. I obviously had mine. And we were, and none of it was, Denis sitting there saying, although they should put all that money into the portfolio because I manage the portfolio and I can offer a lower fee. Denis sitting there going, no, that probably wouldn't help them because of their concern with the estate. So another solution is a better solution, like a seg fund contract. Eric, you weren't sitting there saying, hey, you know what? They should give me all that money and I'll put them in private assets, right? You were sitting there saying, you were sitting there saying, you know what? Like, I think the seg fund solution is probably the right solution because of their estate concerns and the chance that there might be some litigation that would happen, right? Obviously, Ryan said the same. Like, no one was fighting for the money. We were focusing on what was best for that. And you don't get that. I'm sorry to say, and Denis, correct me if I'm wrong, as a former banker, friends who I'm sure you have a bank, you don't get that from the bank. I'm sorry, you just don't. Right? Because they all have their targets. I mean, one of the clients came back and said, well, my advisor at the bank doesn't get paid any commissions. He's doing this for out of the goodness of his heart type thing. Like he just gets a salary. It's like, that's not true. He might not receive commissions, but I will guarantee you he's getting some kind of bonus, and the bonus might be paid out on a quarterly basis. It might be paid semi-annually. It might be just once a year, but they're getting paid a bonus by adding these assets, right?
And it's not only banks that do it. You're going to get, if you're going to have a bad advisor. I've already met a couple of people that I was talking to. He had just moved to the advisor before he met me, so he didn't want to make a change now. But the first thing he said, because he wanted to start his RIF, given he's single, just retired and has no other income coming, and the advisor was saying no. And then the client was feeling, and this was a broker, not at the big bank, so you could look at the independence on this one. Then the client got the feeling that he doesn't want me to start redeeming assets. That was the only reason. And he got that gut feeling right away. He's not a financial guy, but he knows enough to know that, okay, that's not what's best for me. Redeem, like he was maybe saying, first start redeeming to do the TFSA, but don't touch any of the other assets, which were his bigger accounts.
Right.
So again, it's not only banks, it's just people don't like losing assets or money, depending on who you're talking to. And that could be anybody.
And I think one of the points that we don't want to minimize either, that I'm not sure we've touched directly on, is accountability. Having people that you have to reflect on a situation. We all have our own intrinsic biases. That's why I like, private equity as opposed to public equity. Doesn't mean it's always right, but my bias will filter in. And when we meet together and when we discuss these things, I think that's one of the key things, is that we are there to hold each other's biases accountable and to present and open each other's minds. Because I think that if you ask me a question now, as opposed to asking me a year ago before I was a part of our collective discussions in regards to these, my discussions now, I think, would be far better than I could have done a year ago, because I have points of view from Denis, from Ryan, from Jim that I didn't have before. So I think that that's a key part of it, is that when we do collectively come together and have these discussions, we do have opinions. We test those opinions. We say, this is what I think might be best. And Jim says, well, I think this, and we talk about why. And then all of a sudden we come to consensus. And that's the key that you don't get in a lot of those other situations, is either their consensus is already set. Like, you can go to a team at the bank, but they're going to serve the bank's interests. They have their own products to sell. They have their own. And so where we're all independent, it does create a far broader starting point, so that when we do come to consensus, it's far more aligned to what the client wants, rather than us trying to bend to whatever few products we have to try to apply. And it goes back to Jim's construction allegory. You know, if all you have is a hammer, well, everything starts to look like a nail. And it's nice having multiple expertises around, so that we don't get stuck in that. I'm just going to use my hammer, and yeah.
Well, now we're getting feedback, Ryan. So as we wrap this up, now that Ryan's joined us, well, Ryan, maybe you can talk a little bit about your cash flow coaching program and how that would help clients.
Cash flow, parents always said I should have been a teacher, and clearly not in the tech industry. But besides that, the cash flow is really about behavior based. And it's something that just isn't taught in school, and something that we're not taught along the way. And part of the cash flow system is taking different components within people's kind of learning abilities. So we have the educational piece that we tackle, being able to go through some of the modules. Don't worry, they're not too hard. You're not going to be tested on them. Really, it's a life test, really. And introducing some things that people may have missed through school or slept through school, or things that just simply weren't taught. That's one of the big things that we do when it comes to the educational piece. On top of that, we're providing people with an actual cash flow. So really freeing up a lot of money they didn't realize they were losing. With the clients that we're working with, I'd say, on the low side, we're saving them $200 or $300 a month. On the higher side, we've seen closer to the $3,000 a month. And it's really opening up people's eyes of awareness of the understanding of what money is coming in, what money is going out. And then my favorite part of the behavioral piece is being able to spend 12 wonderful sessions with me as a coach, and understanding what is going on in the world. And what I've seen a lot more of now from clients is they're not only doing it themselves, they're doing it with their spouse, right? The taboo of talking about money. And in some occasions, kids are actually being involved. And I would say probably some of the most well-educated cats and dogs out there who listen in on what we're talking about during creating new behaviors, understanding what caused those behaviors in the beginning, and trying to create those new habits. So moving forward, and we decided to do a coaching because you can't just do a one-off with somebody and hope that they're going to change. It's about having that support system, having somebody that's going to help you be a little bit accountable, kind of train you, and using the network that we have to introduce, because not everybody learns the same way, and not every way is going to work for the same people. So you have to kind of like pivot with some people to make sure that they understand how one thing may work for another person is not going to work for them, and how we can use our resources to find a way that works right for that person or couple or family, or in some cases, businesses too.
I think the reason why the coaching program is very effective is I think we've definitely turned into this gamification world, tech world. So Eric, you and I are, we have fun creating apps and whatever else, and it's for certain people, right? We're pretty good at creating apps and using that level of technology, and it's for certain people, right? But apps isn't for everybody. And there is that need for human interaction. And like you said, Ryan, like accountability as well, right? So the fact that you're walking through the program month by month, over a year, like you said, it's 12 sessions. It could be quicker if the people choose to do it a little quicker, right? But to have that accountability, it's like, again, you can either train yourself, physically using an app. I mean, Eric has done that, and he goes to the gym and spends 3 hours each time at the gym, and that's why he looks like Hulk Hogan. But there are people that's just not good enough. They need to have a personal trainer. They need the guidance. They need that accountability. They need to be able to measure their progress. For those people, you come to us, right? Because we're the ones that are going to give you that human interaction. We're the ones that are going to keep you accountable. You just need that human element, right? Is very important to have. So that's what we offer in terms of the CFO team, right? Ryan, we were talking about the one client situation, the biggest state concern, and you've been working with that situation for a few months now, and you've been competing with the client's bank advisor. And again, it's been shocking to us because, again, you brought the case to us. We've reviewed it. We've talked about it, how the family has shared what their concerns are. And yet the focus by their bank advisor has been around fees and rates of returns, even though when you did the one analysis that even with the higher fees of the recommendation that you've made, the net annual return was actually better than what the bank advisor was recommending with their lower fee product. Their rate of return was actually less or lower than what you were recommending, right? But part of what's helped you through that process is, again, coming to Denis and Eric and myself, speaking to Sonia on the estate side, right? Like, you've been tapping into different professionals, different levels of experience, different backgrounds, and we've all kind of landed on the same conclusion, right? And I think that the fun thing that I'll add to all this, because again, I'm Mr. Tech and I love AI and whatever else. What did I do, Ryan? I actually plugged the situation into an AI. I won't say which one, because AI doesn't have a bias, right? AI is all about the intelligence side, the facts, right? And when I ran it through AI and I put in what the bank advisor recommended, and I put in what we're recommending, and I asked, based on the client's concerns and their goals, which solution would provide them the best outcome? We won, right? Like, AI came back and basically said, yeah, like, based on all these factors, the recommendation we were making was the best recommendation for the client, right? Because yeah, we have some biases, but if we wanted to just put them in a portfolio solution like the bank advisor, Denis, you could do that for us, right? The recommendation we're making, the bank advisor said, oh yeah, I can offer those products as well, but we know they don't get compensated the same way by using solutions that are outside of the main bank products. We just know that. And I would encourage you to look at CBC Marketplace. They've done a couple of exposés about the recommendations that are made at the bank level. And I think it was like 30 or 40% of the employees, the bank employees, have said they have made recommendations not because it was in the best interest of the client, it was in the best interest of their career, their job, right? These aren't things that we're saying. These aren't things that we're reporting, that we're making up. Do your own research, search for yourself. This is basically information that's out there that's public. So I've said a lot. Ryan, not as much. Anybody else want to add anything to the conversation before we start to wind it up or wind it down?
I'll just make one comment based on the team's integrity. I think when I came onto the team, we both sort of interviewed each other. Did you want me on the team? Did I want to be on the team? I think we were both looking for the same answer. Is this guy going to be for the client or for themselves? Throughout my career, my last one, I was a financial planner. I've seen a lot of cases where it definitely was not for the client. It was in the best interest of the advisor. And throughout my career at working for the bank and the brokerage, it was the same thing. So that's why I like this team, and that's why I think it works, because we are in the same mindset of what's best for the client, not us, the client.
Right. And, on that note too, and I'll throw this question out to you guys, and whoever wants to answer, go ahead and answer it. But we started off the webinar today talking about volatility and why working with a CFO team can help you get through the level of volatility that we're dealing with in all the markets. Again, we talked about the real estate, public markets, stocks and bonds, precious metals, Bitcoin, whatever else. So anyone want to take this on? The question is, so why or how does working with a CFO team like ourselves, why is that better for a client in terms of navigating through the volatility, the storm, so to speak, right, that we've been dealing with over the last couple of years? Anyone want to take that one?
Yeah, I think one of the key reasons people make volatility-based decisions is the emotion that is connected to that. And that gets really tough to do when it's your retirement. I mean, that's a very emotional thing to prepare for. And so to say I'm just going to be unemotional about my investments and my potential to be able to survive for 20 or 30 years, I'm going to be unemotional about that. It's very difficult for even us as individuals looking at our own situations. And I think that's the key is the more people you bring into the mix, the more solutions that get presented, the more options you have, and the more clarity you're able to bring to that, because it's not our job to come and say, hey, client, get a hold of your emotions, make a better decision. No, it's ours to educate them so that the emotions don't rule and cause a decision that goes against what makes the most sense for them. And so I think that's the best thing about a team, is that we're able to all kind of transcend that individually. And while one of us might say, well, I really know this client well, so I'm participating in that emotional stress they're having, well, the rest of the team can bring some grounding to that. And it doesn't mean we don't consider the emotional side of it. I often tell my clients, like, this might get you a few % better return, but if you can't sleep at night because of it, then it's not worth that few extra % return. So emotion does play in, but I think with the team, it's just far easier for us to all kind of keep each other in check to make sure that emotion doesn't rule, unless it's an important aspect of that. And that those decisions then become very well informed, and they come with a good education that helps that client to understand why that decision makes sense for them. And I've always told people, my job isn't to sell you an investment. My job is to educate you enough that you can make that decision, feel comfortable about that decision, and then prosper from that decision. And I think that's the key, is that, you know, if it's not Jim's expertise or Ryan's expertise, it's mine or Denis. And that's able to really bring that level of grounding that helps people to make the right decisions when things get volatile. And a lot of the rest of the world seems to be jumping off of a cliff, or going left when you should go right, or going right when you should go left. And we can sit down, we can have that conversation. And I think that's the biggest benefit of a team in volatility, is that we have so broad of a perspective that we can figure out a good plan. Historically, our plans have done well for our clients. And I think that speaks for itself.
Yeah. And I think too, as I think about this, most people, when they work with an advisor, they don't really have a quarterback, right? Because again, they might be working with an advisor who has a single license. So the recommendation, there's going to be a bias in the recommendation. There isn't a quarterback kind of helping them assist in building that house. I'm going to go back to that analogy again. So their advisor might just be, you know, the bricklayer. Nothing like you need the bricklayer, right? But that's it. There's no foundation. They're just going to lay bricks for you, right? When you're dealing with someone who just offers mutual funds as a solution, that's what you're going to get, right? For us, I guess, going back to that analogy, we have, as the quarterback, and I'll name myself as a quarterback in a lot of these cases, we have a bit of a philosophy that we follow, and how we layer things to protect people, right? So when we put a plan in place, there's really 4 main layers that we work with. The foundation, the thing that kind of keeps it all together, is protection, right? Having some form of insurance program, and it could be something that's like a whole life policy that builds a bit of a savings component to it. Could just be having life insurance, could be some critical illness. That's the foundational piece to any plan, because if you can't work or if you pass away, the house of cards falls apart. Right? Then we layer that with some form of guaranteed income solution. Because again, I keep hearing advisors, and I hear it on social media, you know, well, if you're like, even now, I don't know if you guys hear this, but a lot of times I'm hearing advisors saying, well, yeah, if you're projecting 12, 14, 15% per year over the next 30 years, this is what you're going to have. Who's getting 12 or 15% a year over the next 30 years, right? Like it's unrealistic recommendation or projections, right? So they're kind of dressing things up a certain way. So for us, it's like, you know what? You might lose some of this money. You might retire at the wrong time. And that's why we talk about sequence of return risk as a strategy, right? So you need to have some form of guaranteed income in your retirement. Then on top of that, we layer the portfolio piece, right? So that's where Denis comes in and manages that part of the plan. And then we have Eric, who puts the roof on it all, right? With the private and alternative side. That's kind of how we layer our plans. You're not going to get that again if you go to the bank, because they're not going to talk to you about protection. They're going to talk to you about investing. That's just the bottom line, right? And the only guaranteed solution they're going to offer you is a GIC. There's nothing else. So they're going to say, hey, well, here's a guaranteed investment solution. It's a GIC, 2% per year for the next 30 years. You're not even keeping up with inflation. So working again with the CFO team like ourselves, we are layering your plan, and we have the different professionals and expertise who are going to manage each layer of your plan for you with the quarterback. Sometimes Ryan is the quarterback. Sometimes Denis is a quarterback. Sometimes it's Eric. It all depends on the client and the client situation. So how often should a client speak with their accountant and lawyer? And is it built into their planning process? So, Eric, how often do you think a client should be speaking with their accountant or lawyer? I guess it all depends on what lawyer it is, right? If it's their estate planning lawyer or any type of lawyer.
Yeah, it really depends on an individual situation. But your accountant, I'd recommend talking to at least once a year to get your taxes done. The rest comes down to as you have challenges. I mean, as we get older and we get to a point where I've got to start thinking about succession and what's going to happen with my kids, with my estate. It becomes important to talk to them, I think, more at milestones than it is necessarily to have a regular discussion. And I think that's another key about having a good financial planner, a financial advisor, is that they can direct you and tell you when you're supposed to be talking to these people. I have clients who are 35. They should have a will, and I recommend that they do. But the will they have at 35 and the will they have at 55 is going to be very different. And so as they turn 55, 60, 65, that discussion with their lawyer becomes a lot more common. If they're a business owner, obviously they're going to be interfacing with their lawyer a lot more. But it's a tough question to answer when you should be talking to your lawyer, because you could talk to him every day. It's going to get really expensive. That's an expensive friend to have. But at the same time, knowing the moments that you should be talking with them, that's something that we as financial advisors have regular visibility into. And as assets change, as their goals change, we can help them determine whether they should talk to them today, or let's schedule something for next year. Or you don't have to talk to them until you maybe in your 45, 50. Your will should be good until your kids turn 18 or start to get beyond that stage, or they have another kid. And then there's all kinds of options that will do that. But that's kind of what we help them to really figure out, is when those conversations should be had.
Well, that's actually a good point. And I think the other benefit that I can think of with our clients is having access to the lawyer or the accountant, right? So if an individual has a question, they either are going to look it up on ChatGPT and they don't know if they're actually getting the right answer, or they can reach out to a lawyer or their own lawyer and get a bill for $300. Or sometimes I can ask Sonia on their behalf, right? Here's a situation we're working with a joint client of ours. What advice can you give or recommend? And I can do the same thing with Dave, for example, on the accounting side, right? And the client's not going to get a $300 bill for that time. Now, if they're dealing with them directly on, more detailed planning on the legal side, accounting side, obviously they are going to be invoiced for that. But there are sometimes these one-off questions where, I need to know as well as the planner for them, right? And I can tap into those resources on behalf of the client. So it saves them time and money in those instances, right? And I guess the question for anyone who's watching and listening right now, who is your quarterback of your plan? Are you the one that's the quarterback? Should you be the quarterback? Or should you actually work with a team that offers that as a solution for you? And I think what I'll also say is, and this is based on experience, and Denis, you've probably come across this, Ryan, probably you, and even Eric, sometimes you might speak with an advisor and they say, oh, I'm part of a team, and I can refer you to the accountant or the lawyer, whatever else, but they're not really an integrated team, right? They're referring out to an external lawyer that they might have a relationship with, or an external accountant that they might have a relationship with. Or Denis, once upon a time, I would refer out to an external portfolio manager. They weren't integrated, right, with what we're doing. Eric, the same thing, right? I used to refer out to another advisor on the private side. They were wonderful at what they did, but they weren't fully integrated with the team. The difference with working with an integrated team is there's so much efficiency. And again, we meet on a weekly basis. We talk about client situations. and we take that information and then turn around and assist our clients, right? Anything you want to add to that, Denis?
I think, yes, it's big difference between a referral outside where they might refer back to you than within a team and, just part of everyday conversations.
Yeah, I mean, there are situations where maybe I need to say, Denis, here's a situation. It's urgent. I need you to deal with it like right now type thing. And because of our structure, if you're able to, normally you can drop what you're doing and kind of assist with the process. Same with Eric, same with myself, same with Ryan, right? It's hard to do that when you're referring to an external individual because they've got a stack of their own clients that they're also trying to work on that they have more priority over someone that we might be referring to. But being able to do that internally, like I know that I can go to Dave, I can go to Sonia at any time and say, hey, I've got something urgent I need an answer on. They will drop everything if they can, and they will help, right? So a lot of benefits there. What are some shared planning tools that we use? Because here's a one, right? A lot of times when you're working with a referral partner, they're on a different platform than we are, right? So we work in the same CRM. We work within the same technology tools. We're able to, again, access each other. We use the same financial planning program that we all have access to. So again, we'll look at it the week. And I know, Eric, you and I have some joint meetings later this week. You're able to go into the client profile and do your part, right? And I'm able to go in the same client profile and do my part. We're sharing the same planning tools as well. So that also provides a lot of efficiencies.
I was actually going to mention something about that too, Jim. I think it's really important to point out that financial planning software really is, if you look at all of our technology, that's the hub of the wheel. Everything stems from that. And going back to that accountability comment I made earlier, it's important to note that really does guide a lot of our thought process to that overall holistic financial plan. And it gets hard to miss things or to make mistakes or, well, I'm only the investment guy, so I'm not going to ask about their insurance. Everything we do really gets permeated by that holistic financial plan. And so, yeah, just an important note that I think that's a key part that you don't get necessarily with people who are an individual who just don't have the ability to have that breadth of information at their disposal when they're really trying to figure out what's best for a client. So I think that's an important technology point that gives us a view from the very beginning at that holistic side. And
the last two final points here, my question to anyone who's listening and watching is, when your situation changes, so if the sale of a home, if you're moving, an inheritance, anything relating with cross-border, because we do have cross-border clients as well, right? How does the whole team update the plan? If you're working with one individual and they're managing your investments, you have to notify them. Then you have to go to your accountant, notify them. There's 4, 5, 6 different people that you have to notify of any of these changes. And you may notify one of the sale of the home, not notify the others, and there might be some impact. There might be some tax implications, or might be some issues with financing, like you don't know, right? Having the integrated team, I will say that when someone's looking for financing, a lot of times the mortgage team will come to us and say, hey, what assets do you guys manage for the clients? So that way we can kind of put their package together, right? There might be times where a leverage solution might make sense for a client, right? And I know that they're getting a mortgage, so I might say to the client, you know what? You might want to hold off on this because this will impact your mortgage financing, right? It's just because it's an awareness. We've had clients who have passed away, and all of a sudden, we're all being notified of that because that client may have worked with, Sonia right away is looking, well, wills, and got to get the wills out, right? Because we found out that person passed away. I'm right away going, their insurance, I got to get the insurance process started, right? Like there's all these different things that kind of we have to act on as a firm. And a lot of our clients, one of the things that they enjoy working with us, they said, listen, I know that if I pass away, this is me speaking as a client, I can just let my executor know, here's the one contact number, and you guys will handle everything because everything's with you guys, right? So again, simplicity. The last question, and now this will be each one of you can kind of answer. How do you get paid? So Ryan, as the cash flow coach, how do you get compensated?
We get paid to do this. So one of two options for the cash flow, people can pay for a full year and just work a cash flow plan, or they can go through the cash flow plan plus the coaching, and all on our website. It works for the monthly coaching sessions, works out about $100 per month for it. And life insurance, I get paid directly from the life insurance company. And just like most people are already giving their money over to the bank for no advice or little non-advice, this is kind of the same way. I get a percentage of that. And when you do well, I do well. When you do bad, I do bad too. Versus a salaried person who will get paid no matter whether they do bad for you or not.
Awesome. Denis, how do you get paid?
I get paid on a percentage of assets that I manage. When we put something in a portfolio, there's no fees to go in and no commission to me, no fees to get out. And obviously, there's no deferred sales or any type fee like that. So it has to be invested for a period of time, minimum's a month, and then I will be paid. So it's not like a mutual fund where there may be some fees in or out or anything like that. No, it's just the amount of money that I'm managing at during a period of time.
And Eric, same question.
Yeah. So with the private investments, I get paid. Usually there's a small upfront commission and then a back end trailer that will be paid out over time. I really do like the lower front end and the larger trailer, because if something does affect the ability of that company to do what they're doing, it affects me just in the same way it affects the client. And I really do enjoy things that have a high degree of alignment. That being said, when someone invests, say they invest $100,000 into an offering, that doesn't get reduced by what they pay as commission. That amount has to be taken out of the management fees. And also it's important to note that the rate of returns they see are also after all of those fees and management fees have been paid. So the amount they invested doesn't get reduced, and their rate of return stays honest to what they're actually earning. It doesn't kind of try to bake in a fee. And so that's primarily the way I get paid on the private side.
And I'm similar to Ryan and even Denis. So on the insurance side, the insurance companies pay a commission. What I would say is when I first started in the industry, 25, 30 years ago, you would be paid potentially more if you went with one insurance company over the other, or if you did more volume with one over the other. That's changed. That changed about mid 90s ish to 2000. So we get paid the same regardless on if it's insurance company A, B, or C. And I like that because it means there's no bias again, because that was definitely something that was an issue. In terms of the investment side, primarily segregated funds, that's what I'm licensed to offer. You get paid a trailer fee, similar to how Ryan had explained it. So we usually can be paid a front end compensation with like a monthly trailer. And then also there are referral agreements that we have in place, right? So with Eric, with Denis, we all have some kind of split potentially or override. But what I will say is it doesn't cost you more to work with 2, 3, or 4 of us, right? It's all the same. Right. But we do have some formal agreements in place that you would be notified of before signing off on any investment recommendations. So that's how we get paid. So guys, I think that's it. We've gone over the hour. It was definitely an eventful first webinar ever. Thanks, Ryan, for making it fun for us. Maybe we'll get the technology side smoothed out before the next webinar. It looks like there won't be a webinar. So we're trying to do these every 2 weeks, and we are sending invitations in advance so you know what the topic is. But I think the next one officially would land on Family Day. So we won't be recording on Family Day. So we'll probably be back in March again for the next session. What I will also say is just a reminder, this will be converted into a podcast. It will be on our YouTube channel. There will be a blog post as well. We do know that there are people who like reading. We know there are people who would prefer watching, and there are people who prefer not looking at our mugs, and they'd rather just listen to us. So you have different options. And then finally, if you have any questions, you can reach out to us, financial@tvhgroup.ca. You can go to our tvhgroup.ca website, tvhfinancial.ca website, tvhwealth.ca has a website as well, or give us a call, 647-727-4668. And the final way of connecting with us through the comment sections of our social media platforms. So we're on all the major ones: TikTok, Instagram, YouTube, Twitter, Facebook, and LinkedIn. So guys, thanks for your time. Looking forward to the next one. Take care.
Bye.